If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Brunei's economy reflects a picture of controlled macroeconomic conditions, steady fiscal management, and low volatility across key indicators from 2024 to 2025. The country's economic environment is anchored by its strong hydrocarbon sector, prudent government budgeting, and low public debt. These factors, combined with controlled inflation and predictable monetary policy, contribute to an overall climate of stability, even as global markets experience volatility. The stability of the Brunei economy is not defined by rapid expansion, but by consistency, resilience, and long-term sustainability supported by its resource-driven structure. The GDP annual growth rate has remained modest but stable, fluctuating around 1.1%. In 2024, growth slowed slightly due to softer energy prices and maintenance shutdowns in the oil and gas sector, but it never fell into contraction. By 2025, output stabilized as energy production normalized and non-oil sectors maintained steady performance. This small but positive expansion underscores Brunei's economic steadiness, relying on its core industries while gradually diversifying. The growth rate shows no signs of recessionary pressure, reinforcing that the economy remains balanced and predictable. Brunei's unemployment rate has been consistently low by regional standards, standing near 9%. The labor market stability is supported by the country's small population and strong public sector employment. Employment fluctuations remain minimal because the government plays a central role in maintaining labor market equilibrium. Job creation is not rapid, but employment levels are stable, contributing to overall stability rather than indicating economic stress. Interest rates in Brunei are closely linked to regional monetary conditions, given the peg of the Brunei dollar to the Singapore dollar. Throughout 2024 and 2025, policy interest rates remained stable at around 5.5%. This consistency reduces uncertainty in borrowing and investment. Since Brunei relies on external monetary alignment, its domestic stability stems from predictable policy coordination and strong currency management. Stable rates also shield the economy from excessive financial volatility. Inflation in Brunei remains among the lowest in the region, around 1% through 2024 and 2025. This low rate reflects a price-regulated environment and subsidized essential goods. Food, energy, and utilities costs remain controlled due to direct government intervention. Low inflation protects household purchasing power and keeps business input costs predictable, supporting steady economic conditions. The debt-to-GDP ratio is another major factor behind Brunei's stability. Public debt remains extremely low, hovering around 3% of GDP, placing Brunei among the least indebted countries globally. With limited borrowing needs due to strong hydrocarbon revenue, the government maintains large fiscal buffers. This ensures long-term sustainability and provides strategic flexibility to respond to shocks without compromising financial stability. Government policy continues to support a stable macroeconomic foundation. Long-term plans emphasize gradual diversification, preserving continuity while avoiding disruptive transitions. Strategic investments in technology, tourism, and food security aim to reduce dependency on hydrocarbons. External conditions also contribute to stability. Brunei benefits from strong trade relationships, particularly in energy exports to major Asian markets, which ensures stable foreign exchange earnings. While global oil price volatility can affect revenues, Brunei's fiscal buffers help mitigate the impact. Challenges exist, but do not undermine overall stability. The economy remains dependent on hydrocarbons, making it sensitive to long-term energy transitions, and diversification is ongoing but slow. However, these challenges do not create immediate instability because the government's financial strength and long-term planning provide resilience. In conclusion, Brunei's economy reflects a balanced, controlled, and resilient environment. With a GDP growth rate around 1.1%, unemployment near 9%, interest rates steady at 5.5%, inflation at 1%, and a debt-to-GDP ratio of about 3%, Brunei demonstrates macroeconomic stability supported by strong fundamentals and prudent governance. Low debt not only ensures long-term sustainability but also provides strategic flexibility for the government to respond to shocks without compromising financial stability. The fiscal position is further reinforced by disciplined budget management and long-term planning, aligned with the nation's development goals. Government policy continues to support a stable macroeconomic foundation. the country maintains strong fiscal reserves and a conservative approach to spending, enabling it to weather fluctuations in oil and gas revenue. Long-term plans emphasize diversification, but these efforts progress gradually, rather than rapidly, preserving continuity while avoiding disruptive transitions. Strategic investments in technology, downstream industries, tourism, and food security aim to reduce long-term dependency on hydrocarbons, though the oil and gas sector remains the backbone of stability. The balance between diversification and preservation of core strengths supports steady economic performance without exposing the economy to unnecessary risk. External conditions also contribute to stability. Brunei benefits from strong trade relationships, particularly in energy exports to major Asian markets. The consistency of export demand ensures stable foreign exchange earnings. While global oil price volatility can affect revenues, Brunei's fiscal buffers and production planning help mitigate the impact. Moreover, the stable exchange rate maintained through the currency arrangement fosters confidence among businesses and households. Challenges exist, but do not undermine the overall stability. The economy remains dependent on hydrocarbons for a large portion of GDP and revenue, which makes it sensitive to long-term energy transitions. Diversification is ongoing but slow. Labor productivity growth remains moderate, and the small domestic market limits large-scale expansion of non-oil sectors. Nonetheless, none of these challenges create immediate instability because the government's financial strength and long-term strategic planning provide resilience against external and structural pressures. In conclusion, Brunei economy stable accurately reflects the balanced, controlled, and resilient economic environment observed from 2024 to 2025. With a GDP growth rate around 1.1%, unemployment near 9%, interest rates steady at 5.5%, inflation at 1%, and a debt-to-GDP ratio of about 3%, Brunei continues to demonstrate macroeconomic stability supported by strong fundamentals, prudent governance, and sustained fiscal capacity. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.